Welcome back. I'm Pratap here. Today is 23rd December 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. And you know that the cost of the training is over 8,000 US dollars and we are providing complete free training. So in this post, you can find a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Now let's get into the analysis discussion. In the previous end of the day report, we identified 12 high liquidity zones from daily and 75 minutes time frame. Out of these 12, we got 3 trades today. 2 are successful and 1 is stopped out. Let's discuss them first. First one is Dalmia Bharat. This is a daily high liquidity zone. We have a drop, 2 base candles and a rally. Actually, in this analysis, I should accept my mistake. I made one serious mistake that I will explain while we are fine-tuning these zones. Because this one I already fine-tuned earlier. Today I realized I made a big mistake when I was doing. I was wondering how I made this mistake. But anyway, sometimes we are human, we make mistakes, we have to live with that. It doesn't make how much experience you are having. Sometimes we will miss important analysis. So what mistake I made, I will explain to you. Okay, this is the one already I don't know. Previously I discussed with you, but my chart is having my earlier analysis when I opened it. In this analysis, what I missed, let me directly get into that. All these things we already fine-tuned earlier in my analysis. The one I missed is, this is the one, what the trade we got today. We have a failed ERC candle. We have a base candle. We have an excellent leg out candle. And this is the area I didn't draw. It is not there in my chart when I opened it. That is what I surprised. We have a failed ERC candle as a rally, base, rally. Now go to the 15 minutes time frame. Why it is a very important zone, you will understand once we get into fine-tuned 5-minute zone. Here you have 2 order flows. The first order flow, drop, base, rally. You have a drop candle, you have a base candle, you have a rally candle. This drop as a failed ERC. And then again you have a rally candle, you have 4 base candles, you have a rally candle. You have 2 institutional 15 minutes order flows. But did you notice the first 15 minutes I didn't fine tune? That means this is the area the order flow is not good. But look into the second one, you have 2 order flows in this. Now go to the 5 minutes time frame. Now you understand why we didn't fine-tune this area. See all these base candles, 1, 2, 3, 4, 5, 6, 7. This is also a tiny candle, but still if you consider this as a drop, you have 1, 2, 3, 4, 5, 6, 7. So such kind of structure will be violated easily. Okay. Even if you want to consider this as a drop base rally with some hidden body, and this is already a tested one. That way also you know that this zone will be violated. But what about this? Here you have, this is a drop candle, you have two base candles, and then you have a rally candle, drop base rally. And then you have a rally candle, you have a base candle, and then you have a rally with pro gap. Observe this. Why it is very important is because of this pro gap at the body, hidden body. So this is a very important zone because it is having a small pro gap, probably that will strongly hold the prices, and we get a good trade in this zone. That possibility is there. So that's why it is a very important zone. See, now you got clearly rally base rally with the pro gap, and we have another one, drop, two base candles and a rally. Because this is a drop, the lowest wick I have to try. Made again a mistake here. Drop base rally. Okay, this medium size candle may be part of the base. But the thing is, this zone is already having a rejection. Cannot consider this as a test. Of course, rejection is also a kind of test, but rejection sometimes will give clues indicating this is the zone we have a strong institutional order flow. Immediately rejections you see immediately after the leg out candle, it will come, pick the orders, and strong push will be there. Many times such kind of zones will give good trades. Sometimes they will also be violated, but many times they give very good success. It's all depending on you whether you have to accept this trade or not trade. Some will consider this as a tested. They don't accept this. They are very strict. Some will consider, okay, let us take a risk here. What they do from where the rejection started, near that area they keep their orders. That way risk also will be minimized a little. You may get even more reward. Okay, but our first trade is in this area, this rally base rally with the pro gap. If this is violated, then we will plan our trade in this area. This is our trade plan. Let us see what happened today. See, this is the area, see, already we know that this zone will be violated. The structure is not good. That's why we didn't fine tune this area. Maybe it holded for some time, for around 10 minutes in these two candles, but finally it came, and in this area, see, this is the zone having pro gap. Probably the pro gap would have consumed most of the supply. Today supply is very strong in the initial stage. After that, the entire supply has been consumed, and see immediately how easily it pushed and reached the target. I know some of you might have here also some pro gap is there. A little before you might have exited your trade. Before the gap starts, a little before. But anyway, it reached the 15 minutes target also. So it's an excellent trade. So how much profit this Dalmia Bharat has given? Dalmia Bharat has given 16,183 rupees, and this is 17.6% ROA. And such kind of trade opportunity I missed from my analysis. That's why I'm feeling regret. How can I miss such a important? We have a pro gap this zone. It's a very important zone. Such kind of zones we should not. It is a fine-tuned zone with pro gap. If this is a normal zone with pro gap, we would have considered as a aggressive trade. Some of you people who are not having a comfortness with aggressive trades may not consider, but this is not an aggressive, this is a fine-tuned zone. A fine-tuned zone having a pro gap. It's a very powerful zone. A small zone, moreover it is a very small zone. See how it holded the prices today. A small zone, how it holded the prices. And moreover, from this zone, have you noticed, again a drop base rally is created. That means the same zone, once again, it is going to give you opportunities in the coming days. Maybe this is acting as a high liquidity zone. It is too early to say, but such kind of price actions we will observe at the high liquidity zones. Maybe who knows, this 5 minutes could be a high liquidity zone. The initial signal, a drop base rally is created. That means institutions, see what is this LOTL's indication? LOTL's indication is that is the area institutions are showing more and more interest. That's why they are keep on adding new order flows in that area. That is the main purpose of LOTL. Many people learn LOTL, okay. But what is the practical usage of LOTL? The LOTL indicates that is the area institutions are having more interest. That is the area institutions are adding new order flows. That's why that is the area we should also keep an eye to plan for multiple trade opportunities. This is one indication about the LOTL concept, practical uses. This is how you have to understand LOTL concepts. Because LOTL is within the same time frame. Another zone is overlapped. Okay, future it may give again another trade opportunity from the same zone. But anyway, today it has given a very good profit from this area, 17.6% ROI on one futures margin cost. Rarely you get such kind of opportunities. And moreover, how much time it took to give that kind of huge profit? Morning 9:50 candle it reached. And then when it reached 10:20 candle, in just 30 minutes, the trade is completed. Reached the target. In 30 minutes, just 30 minutes, it gave you 17.6% ROI in one futures margin cost in 30 minutes. This is the power of the high liquidity zone, but at the same time, I am also feeling regret. How can I missed such a huge opportunity in my analysis? I was wondering how I analyzed this chart earlier. Okay, anyway, I missed an opportunity, but our high liquidity zone has provided this opportunity. Whether I utilize it or not, we are utilizing or not, it is a different story. But I am admitting my mistake. Okay, this is about Dalmia Bharat, but there is another one has given trade, that is Bajaj Auto. This is a daily high liquidity demand zone. This is the high liquidity zone. Have a rally, two base candles and a rally candle. This is what identified by our software. Previously also this zone tested multiple times, first time, second time, third time. Third time when it is tested, it has created a new zones here. Go to the 75 minutes time frame. At the proximal line, order institutions created the order flows. And see the huge rejection before the zone earlier. This itself indication, this is the area we have an opportunity. That way immediately you have to look. Again second time, near to the zone, again huge. That means strong institutional order flow. Institutions might have provided in this area. And this is the third time, came near to the zone. And today, price entered into the zone. See, these price action clues, how it resulted a good trade. That's why when you see such kind of price actions, this is the area you should concentrate. This is the first clue. Why this area attracted me is because of these price action clues. Just before the zone, huge rejections previously, 3 times. Today, 4th time prices entered, sharply moved up after that. Okay, what is that order flow is there? Here we have a 75 minutes order flow is there. We have a drop, base, rally. That's why this is at the proximal line. The overlap took place. LOTL, not LOTL. This is zone confluence. So, you know that zone confluence takes place at the proximal line, at the distal line, or even exactly inside, somewhere inside the zone. So, today it happened, drop, base, rally. And this order flow you need to identify 5 minutes level. First, before that, go to the 15 minutes time frame, because always we look for fine-tuned zones. So one time frame below another time frame, that is the way we have to go under. Here you see again, you have a rally, you have 1, 2, 3 base candles, you have a failed ERC candle as a leg-in, and then a very good follow-through candles. So rally, 3 base candles and a rally, it's a failed ERC. See the failed ERC, every failed ERC is not qualified as a leg out, but the leg out, its body is coming out of the zone, and further justification, we have very good follow-through candles after that, and also very good movement in the market. By considering all these things, I am drawing this 15 minutes fine-tuned zone. See how institutions, many people ignore this zone. That's what institutions want. They don't. Our focus should move, because those who land the complete theory, you are blindly following the theory as it is, you would have avoided this zone. You would, because you are not convinced with this candle. It doesn't have 50% body, 75% body, or at least 50% body. Such kind of candles we ignore. But you already land as per the dynamic view. We have at one point of time, it's a rally candle. After that came down, but still the body is completely moved out of the zone. A considerable amount moved out of the zone. It is a good confirmation, it is a valid leg out candle. And further more confirmation, this is a good zone. All these follow-through candles are helping us. Okay, anyway, it is a 15-minute zone. Now our interest is on the 5-minute zone. That is the real institutional order flow. So go to the 5 minutes time frame. Here you have a rally candle, you have 1, 2, 3, 4 base candles and a rally. Or even if you consider this as a rally, 2 base candles and a rally. Either way you can consider this zone. So this is the area we have our institutional order flow. And from this area, prices came near to this and sharply they moved up earlier. See here? This is the first time prices came very close to the zone. And not only that, here you see drop base rally is created just before the zone. Actually touched the zone, because we drawn only type 2 proximal. If you would have drawn type 1 proximal, you would have drawn the zone like this. Now you see, it took the entry from the type 1 proximal, almost the low of this candle, almost maybe, drop base rally. But risk point of view, we have to keep a type 1 proximal, type 2 proximal. Maybe this zone is acting as a HLQ zone, if you consider all these type 1 proximal level. See, next time, see, sharply it came and again moved up. The LOTL zone, again once again came near to that LOTL zone area and moved up. And today our actual trade, the fine-tuned area at type 2 proximal level, today it reached. And sharply, next candle it moved. Within 5 minutes our trade is completed, within 5 minutes. But to 15 minutes, you have a drop base drop. Actually, this is the revised target. What is our initial target? This is the one. But it is slightly pierced. Okay. Pierced zones you can use for targets. But this candle, what happened? It is picked up the orders. It didn't sharply move up. The candle is closed. This indicates a new institutional order flow at 15 minutes. Drop base drop. Immediately you have to revise in the next candle when prices are moving up. You have to book your profit here. Go to 1 minute time frame. How price movement took place, you will understand. See here, you got a trade at morning 9:59 candle. Of course, 3 candles, you got this opportunity. Prices were within this area. And then they move. Here maybe a 3 minutes or 1 minute drop base rally is created. Go to 3 minutes, you get even better clarity. Because 3 minutes could be a supplement to 5 minutes. Now 3 minutes also we don't have clarity. So they are like pivots only. But anyway, we got a trade at morning 9 o'clock 59 minutes candle, reached the target at 10 o'clock 4 minutes candle. That means in 5 minutes the trade is completed. So excellent profit. How much in 5 minutes? How much profit we would have got? Dalmia Bharat, in Bajaj Auto, it gave 4,222 rupees profit, which is 3.5% ROI as per one futures margin cost in just 5 minutes. There another trade, previous trade, Dalmia Bharat, in 30 minutes it gave 17.6%, and Bajaj Auto has given 3.5% ROI in just 5 minutes. That is the power of these high liquidity zones. Okay, this is about a Bajaj Auto trade. Next one, we have a stopped out trade from Colpal. This is a 75-minute zone, 75 minutes demand zone. Here it is stopped out, but it moved up after that. But before it moved, the buffer, stop buffer is also violated. That is what you have to understand. Narrowly, our stop buffer. Otherwise, it could have been given a good trade at the closing hour of the market. But anyway, we have to accept. Once the stop buffer is hit, even if it recovers after that, still it is a stopped out trade only. Because we can't accept giving a relaxation to the stop. After hitting the stop loss, you must exit. After that, whatever happens to the market, we should not care. Because first of all, you never know what is going to happen after it hit the stop loss. By seeing this price action, we feel like maybe we would have held it further. Otherwise, we would have got a good profit. That kind of feeling we will get. But many times what happened? After hit the stop loss, sharply prices will go down. Why it moved further here below, further below? There could be maybe institutions might have used a bear trap. Bears are captured here. But that is okay. Sometimes, rarely it happens. Okay, first of all, how we fine tune? First of all, we know this zone will be violated. How can we say? Go to the 15 minutes, you get clarity. Then how we planned our trade? We did not plan based on the fine tuned zone. We planned based on lesson 22 concept. Lower time frame zone as an horizon to the higher time frame. Many times this concept worked very well, but unfortunately today it is stopped out because institutions further used the traps today. Let me explain that bear trap. Many times it is not easy to identify that bear trap because we believe our lesson 22 is very powerful, but today it's unfortunate. See the 15 minutes, you have a drop candle and then you have a rally candle, drop rally, no base. So immediately this zone will violate, but at the proximal line we have a rally base rally. This is the lower time frame zone as an horizon to this 75 minutes high liquidity zone. Definitely we believe this is the area we have a strong institutional order flow. Actually it is true because majority of the day it holded the prices. till the last minute of the, till the last hour of the market closing session. Last hour, this zone is violated because institutions consumed all the order flow. Why they consumed? Below they kept a 5 minutes trap. Let me show you once we get into the 5 minutes time frame. So this rally base rally is the 15 minute zone. But where you need to take the trade? You need to take the trade at fine-tuned 5 minute zone. If that is not there, again this zone also we will predict this will be violated. Even the origin also will fail. We can predict if this order flow is not there. But 5 minutes order flow is there. That's why it holded the zone for majority of the trading session today. After that the orders are gone. See here. You have a rally base rally. That way you can consider this is a failed ERC candle as a rally. This is also a large candle. So I consider this is the leg in. You have a base candle, you have a rally, and then follow through candles. This is the 5 minute zone. Okay, but below have you noticed a rally based rally, and this is the one actually did the job today. This played the major role today. Of course, our zone is also played the role. Because it holded majority of the day, it holded the prices. Once this order flow is gone, then prices came here and then sharply it pushed. Because by the time all our stop losses hit and institutions captured all the bears, stop loss hit, you go for short trade. Because earlier you took a long trade, you took a short trade, stop loss, they are all considered as bears. All these bears are captured by these bulls. This is the trap. These bulls are trapping the bears. That's why we named it as a bear trap. That is what I explained in lesson 21. Bull traps and bear traps. Rally base rally. See what happened today? See today majority of the trade at 12:55 prices came. It is slightly pierced, but okay, within the stop buffer, probably, or majority of the time. So somewhere here your stop loss might have been hit here. After that it entered into this zone. All our stop losses are captured here. And then see how sharply prices moved. From here to here, how much profit it would have given? It would have given. If you would have properly assessed this bear trap, just imagine how much profit you would have got. Because here our concentration is on lesson 22, lower time frame zone. We are hoping it will hold, but today it failed. See, majority, see how much time. Actually, it should go sharply. Maybe 2 or 3 candles it should hold and then move. But here itself it is pierced. We have to realize it is a pierce, but sometime after pierce also, prices will go sharply. But that didn't happen today. Still prices were holding. Maybe institutions might have added some more demand here. But that is not good enough to hold the supply. The supply keep on consuming. So strong supply. And finally the supply is over here, they reached. Here institutions captured the entire supply and then pushed the market up. So your entry could have been 2706 to 70 paisa. So assume somewhere here, maybe it won't reach our target because this is a 14-15. You don't have any, here you have rally base drop, 5 minutes supply is here. Time before reaching time is over. Maybe tomorrow prices will further go up. Let us assume before closing the market you might have exited somewhere here. 2728 80 paisa or 70 paisa. 2728.70 paisa, so that we get round value. Okay, 70 paisa I didn't add, plus 70 paisa. So you would have got Oh my god, 22 plus 21.3 plus 7. You would have got 22 rupees profit on each stock. Definitely you would have got around 5% ROA with this, around approximately. But anyway, these are all just what could happen, our assumptions. But the reality is this is the area lower time frame zone has failed and violated. Why it moved up? Based on that assumption we are calculating. But have we really assessed that? No, we didn't. Why? Because here we have LTF zone as a horizon. We are believing on that because the order flow in that areas are very strong. Of course, today it is failed. It is an exceptional scenario. But majority of the times we have seen the LTF zones has given a very good success rate. More than 90% success rate they have given to us so far. Maybe this is the second one or third one. The 75-minute zone as an horizon is failed for us for the last 6 months data if you consider. Okay, this is the only one stopped out trade, call Paul. So how much a loss? 8,800, sorry not 8,000, 886 rupees loss. 886, which is equivalent to 1% negative ROI as per one futures margin cost. So this is about call Paul. And let us look into the remaining stocks quickly. Astral is a daily zone. This is also very old zone, almost 1 year back. 1 year back, 23rd May, you won't be having 5 minutes data. But recently prices reached near the digital line and again moved up. During this process, institutions again created a zone today here. So today prices came very near to that, but they didn't enter into this fine-tuned area. First let me show you how I fine-tuned this zone. See here in this stock also near the proximal line institutions created a drop base rally. Similar pattern we have seen for Bajaj Auto also. But Bajaj Auto gave a trade, Astral did not give the trade. That means prices didn't reach here. We have a drop base rally. This one again fine-tuned with 15 minutes time frame. In the 15 minutes, we have again a drop, 2 base candles and a rally with pro gap. This is the 15-minute zone inside the 75. Now within this 15 minutes, go to the 5 minutes time frame. It is very tricky. Proper way you have to identify the 5-minute zone. See, it looks like there is no proper 5-minute zone. We have a rally, base, rally, and this is violated here. Maybe violated or till the digital line it picked up and moved. It looks like rally, base, rally. It looks like next time this zone will be violated, but actually no. Earlier we have a drop, base, rally is there. Again same mistake. You have to take the lower of, in drop, base, rally, lower of drop, base, rally, the leg out you have to take. So this is the lower value. Okay, this drop base rally may be holding as a high liquidity zone. This is holding the prices. See here again, after that rally, base, rally created from this zone, LOTL zone. From here, rally, base, rally. Next time again picked up the orders. Once again it moved. So by considering all these things, we are considering this could be a high liquidity zone. Maybe we can plan another trade. Today prices came very close, but not good enough to plan the trade today. So this is the fine tune. Even if you add entry buffer, you won't get the trade. Excuse me. Twice it came today. But anyway, it's not good enough to plan our trades here. So that's why we didn't talk about Astral in the successful trades. Okay, next one is Bharat Forge. Bharat Forge is a daily zone. And this zone is not having a proper fine-tuned 5-minute zone. How? I will show you. We have a 75-minute zone here. Rally base, looks like tiny candles, rally base, rally. If you consider as a medium size candles, you won't consider them as a base candles. Tiny candles, okay, you can consider, but anyway, I have considered tiny and I had run. If anything wrong, you will see in lower time frames. Go to the 15 minutes time frame. Look into the 15-minute structure. Here also you see, all these candles looks like small candle, but the moment I hide this big candle, you get clarity. Maybe this is a rally candle. You have 1, 2, 3, 4, 5 base candles and then a rally candle. Rally, base, rally. Now 5-minute structure is not really good. There I got confirmation this zone will be violated. That's why I didn't draw fine-tuned zones within the 15 minutes area. If you consider 1, 2, 3, 4, 5, 6, 7, 8, somehow I am not, because a lot of consolidation took place in this area. You may say rally, base, rally, why can't we consider? Somehow I am not comfortable this is a leg out candle, because the other candles also, I don't know, because a lot of price action took place here. Already some rejections and a lot of consolidation here. And moreover, this candle is again a drop candle. So anyway, I didn't feel comfort in this area. So that's the reason why I didn't draw any order flow here. Anyway, price did not come. Dalmia Bharat we discussed. And next one is Godrej consumer. This one already we discussed. Previously I explained how I fine-tuned this zone. Today also prices did not enter into this order flow. Please refer the old videos so that you understand how I fine-tuned this zone. Next one is HL. This is a daily high liquidity zone. We have a drop, 3 base candles and a rally candle. This is a medium size candle, software considered part of the base. And this is the body with hidden body. And fine tune with 75 minutes time frame. We have a 75-minute zone here. We have a rally, 2 base candles and a rally. Rally, 2 base candles and a rally. Hidden body. And also you have one more rally, base rally, but I didn't fine tune. Maybe the structure is not good in the 15 minutes time frame. Let's see. The first one we have a fine tuned zone. Here we have a rally, 2 base candles and a rally candle with hidden body. And see the structure, rally prices are moving up. Somehow I didn't feel comfort here, the price movement under. See, generally what happens, prices move in a specific narrow range, but it's widening the range. So I know this zone will be violated. Many times such kind of zones will easily violate. So that's why I left this area. And this one again we need to fine tune with 5 minutes time frame. We have a drop, 3 base candles and a rally candle with hidden body. So this is the area we planned our trade, but today prices did not enter into that area. Next one is HDFC Bank. This is also a daily zone. We have a rally, base, rally with hidden body And this is the one fine tuned with 75 minutes time frame. We have a drop candle, we have 1, 2, 3, 4 base candles and a rally candle. This one again fine tuned with 15 minutes time frame. Here the structure is not good. This is looking like rally base drop. Hide this gap, you will get clarity. Rally base drop. So this is, but here identified rally base rally as an horizon to this entire daily zone and also this 75 minutes fine tuned zone. Rally base rally. Lower time frame zone as an horizon. But we need to fine tune with 5 minutes time frame. Go to the 5 minutes time frame. Five minutes time frame, you have a drop candle, you have 1, 2, 3 base candles, rally and follow through candles. And this is from this area, twice it picked up the order. This is the first time, moved up. Again, second time, and now sharply moved up. And entire zone is created, daily zone. So that's why this is the area we are planning our trade. But anyway, today prices did not enter into the zone today. Next one is idea. Idea is also a daily high liquidity zone. Drop, 2 base candles and a rally. Earlier there was a zone. This is also high liquidity zone. But this zone is from in the year 2002 or 3. 2023. You can't fine tune up to 5 minutes. But we have a LVTL zone created. That is also a high liquidity zone. This drop, 2 base candles and a rally. I think it is, no, not 2 base candles. This is a drop base rally. Because it is a drop candle till the lower wick we have drawn. Or maybe drop 2 base candles rally, whatever it is, both are valid. Go to the 75 minutes time frame. In the 75 minutes time frame, we have again a drop. You have 1, 2, 3 base candles and rally candle. Drop base rally. This one again you need to fine tune with 15 minutes time frame. Go to the 15 minutes time frame. In the 15 minutes time frame, you see you have a failed ERC candle as a leg-in. You have 1, 2, 3, 4 base candles and a rally candle, follow through candle. This one again fine tuned with 5 minutes time frame. But 5 minutes to fine tuning is a tricky, very tricky. You should properly observe. Few interesting points also you will see here. First I have looked into this zone. First I didn't draw this zone. First I looked into the zone. I see interesting observations. Here the price structures are not very clear. At some point of time I thought maybe we can consider this rally, 3 base candles and rally. But all of a sudden my interest is on these 2 candles. I have seen the low of this candle. What is the low of this candle? 6.74 paisa. 6 rupees 74 paisa. See the low of this candle? 6 rupees 74 paisa. Again low of this candle? 6 rupees 74 paisa. Again see the low of this candle? Again 6 rupees 74 paisa. Low of this candle? 6 rupees 74. Low of this candle? Again 6 rupees 74 paisa. Low of this candle? 6 rupees 74 paisa. That means 6 rupees 74 paisa institutions might have kept a huge strong institutional order flow in that price. What could be the reason? Is there any rose? Now I have seen this drop base rally and it picked up, and after that institutions might have kept a heavy order flow at 6 rupees 74 and the prices coming and not able to break that area. See on all these candles. So then I realized that this could be a high liquidity zone, drop base rally. This is holding the prices multiple times. See here it pushed the prices up, went up to here and then again came again from this zone at 6 rupees 74 paisa, that is the proximal line. From there it is holding the prices. Maybe next time when you are planning your trade, 6 rupees 73 paisa you can plan. 1 paisa above. Because 74 paisa, if it is having strong order flow, there is no guarantee that your trade will execute. 6 rupees 73 or 72 paisa you can add. But this is a small price. Even if you add 1 paisa, the impact will be huge. So carefully you should plan your trade. But anyway, today prices did not enter into the zone. We didn't get any trade opportunity. Next one is PFC. PFC is also a daily high liquidity demand zone. I think PFC already I explained. When I opened the chart is there. I already explained. Please look into the earlier videos. One of the videos I explained PFC. Zydus we discussed yesterday. We got 2 trades. Yesterday means last Friday. This is a 5 minutes fine-tuned high liquidity zone. I told you, until the zone is violated, we can plan trades. But anyway, today prices did not enter. And Colpal we discussed. This is the only one stopped out trade today. And Shenzhen also we discussed earlier. This is a 75 minutes high liquidity zone. Shenzhen already we discussed earlier. Please look into the earlier. Type 3 proximal entry we are planning our trades. We have a high liquidity zone. And type 3 proximal is our, because that is the risk that is the type 3 proximal risk only we can handle. It is having a fine-tuned 5-minute zone. This one dropped 2 base candles and a rally, but the entire risk is here within the type 2 proximal. Obviously, that is the area the order flow also is there. Prices just before reaching, they were moving up, and it is acting as a high liquidity area. So just before the type 3 proximal entry, prices were sharply moving up. So today also prices came, but not good enough to plan the trade from this area. Before itself it moved up. And Shenzhen also we didn't get the trade opportunity. Please look into the whole video so that you understand how we planned this trade. Probably one of these days we might have discussed. On 20th November or 21st November we might 21st or 22nd November we might have discussed this. Probably on 22nd November we might have discussed this stock. But anyway, these are the high liquidity zones. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.